Yo, hello traders. My name is Pancho, and on this video, I'm actually going to tell you on how I actually analyze the market, on how I usually always find opportunities in the market. And my analysis always, I usually first draw the New York Midnight Open. I just have to know when, I just have to draw that first, and then after that, I usually just have to wait for the market to take out the between the Asian range high or the Asian range low. So that's the beginning of how I usually analyze the market and how I take my trades during the London session. Then after I draw those, I usually wait for the market to take out between the Asian range high or the Asian range low. And then after that, I have to wait for a market structure shift to see a market structure shift. And then after I see a market structure shift, I just draw my order block or sometimes my fair value gap, and most of the time I usually draw my fair value gap, and after that that's the area where I actually always take my trade. So for me, my what other people use as the daily highs and daily lows are usually the Asian range highs and the Asian range low. So I only use the Asian range high and the Asian range low as my buy stop and my sell stop liquidity. So let's start and let's see. So here I'm in 5 minutes. So and this is GBP USD, and I'm actually going to show you on how I actually analyze the market. So the first thing I usually do is that I usually mark out the New York New York Open. So New York Midnight Open. So let's draw the New York Midnight Open right here. So this is New York Midnight Open there. So after I draw the New York Midnight Open, what I do is that I just uh I have to know the Asian range high and the Asian range low. So I usually use this. I usually just use this indicator, the Asian session range. So this shows me the Asian range high and the Asian range low. So right here you can see this is the Asian range high, and this one is the Asian range low right here. Let us see if this is, yeah, as you know, the market has crossed here now. Let us see, let's play it if this is the actual one. Yes, that's how we see. Okay, so guys, so as you can see here, this is Asian range low there. That's where the Asian range low ends there, they're down. So this is Asian range high. Asian range high. And this is the Asian range low. So after I have marked my Asian range and my Asian range low, I just wait for the price to see how the price, if the price breaks either the Asian range high, then I'm going to look for market structure shift and look for selling opportunities. But if the market breaks the Asian range low, I'm going to wait for a market structure shift and then look for buy opportunity or buy entry. So let us see if the market will break if the market will first break the Asian range low or the Asian range high. So let me just extend this Asian range high and then let me extend them just there. So let us see. Increase the speed. That's where we are. Yes, yes, yes. No, we don't see. This is not Asian range low. This Asian range low has not been taken still. So let us see. There you see. The market has taken out the Asian range high. Now, what am I going to do? I'm just going to wait for market structure shift. And where am I going to draw the area where I'm expecting to see the market structure shift? I'm going to expect to see a market structure if the market breaks this low here. Yeah, no. This will be my market structure shift. If I see the market, this will be the market structure shift there. So if the market will take out that low, I'm actually going to expect, I'm just actually, if this was taken, this is what I'm going to consider as a market structure shift. And after I see this, after I see the candles breaking below this level, and I'm going just to draw my fair value gap here up, or just my order block. So let's see. Let's see how the market, if we see a market structure shift. Yes, you see, this is a market structure shift now. You see the market as the that this now is a market structure shift here, because the market has taken out this this low. So this is a market structure shift. So now I'm actually going to spot where am I going to see any fair value gap actually there. I think everybody, you see here, this we have this fair value gap right there. That the fair value gap, and that's is which is behind here we see this order block, this big order block here. So actually I'm going to use this fair value gap as my entry area. If the market, this is the fair value gap, actually this is a fair value gap, and also, and so if that's a fair value gap, now I can actually say this is what we call buy stop liquidity right here. So this is buy stop liquidity to me. I'm waiting to see the market sweeping this. So this is buy stop liquidity. So this is a buy stop liquidity right here. Buy stop liquidity, this one. So what I'm actually going to wait is for the market to go back there, and then I can actually expect to see a movement, and I'm going to expect the market to respect this point. I'm actually going to use this. This one is as my take profit area. So let us see how the market plays out. Let me delete this one. Yeah, there we are, triggered. No, market trigger. Let me put it there. So now we see that now the market has reached to where our fair value gap is. Now the fair value gap there, the market has filled this. So I'm expecting to see a continuation to the downside, a reversal, call a reversal. So I'm going to enter right there here, and I'm going to put my TP here in this what we call this swing low. Let me call it the swing low, this lowest point. So my TP will, my stop loss will a little bit above this high, above this. So above this, what you can actually call it above this swing high. So a little bit above this. Yeah, that's a good area. So I'm going to let it play and see how the market will react. Yes, there we are. Yeah, TP hit. As you can see now, the market has hit our TP, and as you can see, uh, our trade went well. So that's how I actually analyze the market. And just to repeat it, it's just like that. I usually first I have to see, I have to mark my New York open price, and this was a New York open price here, you can see. And then after that, I usually have to make sure I draw my I have to make sure I draw my Asian range high and my Asian range low. And another thing, I just draw them because I have to wait for the market to sweep either the Asian range high or the Asian range low. So if the market sweeps the Asian range high first, then I'm going to look for a selling opportunity. And for me to get the selling opportunity, I have to wait for a market structure shift. And after I see a market structure shift, I have to mark my I have to draw my fair value gap or my order block, and then I have to wait for the market to make a retracement to that fair value gap or order block, and then I can just take my trade, and then that's how I analyze. So guys, thank you for your time. I hope this video was useful to you. So you can just like, comment, or also you can subscribe to this channel. So I hope this was useful to you. So guys, thank you for your time. And after that, I don't have any more to say. So guys, enjoy your day, and have a nice trading day. Thank you so much.